Hi, this is Colin Richards, president and founder of Lord & Richards, and I'm delighted to have the privilege every single day to be speaking to people just like you about how you can become financially independent. And it's one of the most important conversations, not because money is the most important thing in life, but it's a tool that we can use to deepen relationships, to have more satisfying and rewarding experiences, and ultimately live for the glory of God. But right now we're really going through some things in our economy and in our markets. We're suffering really from poor leadership at the highest levels in our country. Decisions have been made that have put us into tailspins in the areas of inflation, the market. We're seeing wars on the horizon, wars going on right now. All of this is having a negative impact on those who are trying to save up and prepare for retirement or who are already living in it. In a recent article, we note that the Center for Retirement Research at Boston College says that plan participants in 401ks have had $3 trillion wiped out of their savings already this year, just the first half of the year. And we learn, of course, that that's challenging for billionaires to lose some of their net worth. And we know that the current bear market, of course, causes billionaires anxiety. But for them, with their abundant resources, it's really a blip on their financial radar. They clearly have the wherewithal to weather the storm, as we see them in the news living their exorbitant lifestyles. But for the average American, those who are putting money away month after month out of their paycheck into their 401k or who are already living on it, this is an incredibly difficult time. And historically, 401ks take about 2 years to recover. That's not too bad if you're younger, to be able to, from the start of a bear market for 2 years out, have that amount of time to recover. If you're in your 30s, 40s, even your 50s, recovery is possible. But when the market is down, people who are living on their retirement assets are in a really bad position, right? People who use their retirement money to support themselves really suffer during times like this. And again, as we've talked about in another segment, getting good instruction, counsel, advice, knowledge, and wisdom from competent, capable people who have your best interests at heart is critical during a time like this. I see people right and left making decisions against their own best interests simply because emotionally it's a difficult time. So if you're living on that money, I know it can become a time of great pressure as you watch the balance in one or more of your accounts go down. But here at Lord & Richards, we believe that the only people who are really negatively impacted are those who are relying on the market during or before retirement, not those who have built a solid plan for financial independence that factors in bear markets, that factors in regular declines, that's designed and built for volatility. Now, I'm not talking about a perfect plan in a perfect world that doesn't exist, where you never lose money, your money is 100% liquid all the time, and it gets amazing growth. Those three can't be brought in together. You can't have perfect safety, perfect liquidity, and amazing growth all in one investment. It doesn't exist. That would be the perfect investment. But most people I know are logical and are wise and know that, well, if I can compromise on one of those three, then I can probably do pretty well. So, of course, at Lord & Richards, we talk about three kinds of money that everybody needs in their portfolio. You need your emergency money. You need that money that's totally liquid, that's totally safe, and you're willing to sacrifice some growth on that, right? Maybe a checking, savings, money market. And then you need your money that's liquid, but also has better growth opportunity. We call that a growing reserve. Money that you don't depend on, that's liquid, but has risk. Money for the future. Money that you can avoid drawing on during bear markets and periods of volatility. That's a reserve. It does not need to be the core of your retirement strategy. All your risk is there. And then a third kind of money, of course, is your protected money. Money that's safe. Money that's a little less liquid. That's your compromise and still has growth opportunity. So we'll talk about that more in another session on how to de-risk your retirement. So only those who are literally putting their money in the market and withdrawing it at the same time as a bear market are being substantially hurt because they lack a solid plan for financial independence. We've seen also in this report by the Center for Retirement Research at Boston College that with target date funds, which are funds that allow you to pick a date that you intend to retire, and they auto build a portfolio that's supposedly got about the right amount of risk for your goals. Well, unfortunately, most of those are designed pretty heavily overweight in stocks because it's so hard in the past to get real growth out of bonds and other low-risk investments. Here's an interesting fact. We tend to get more desperate about this when our incomes are lower and, of course, our savings rate is lower. So desperation feeds a bitter cycle where we take more and more risk in order to try to make up for lost time or for low income or for a low savings. So those with incomes under $30,000 a year in the study had 81% of their money in stocks. I've just got to tell you, at Lord & Richards, we never do that. We're never going to put 81% of our clients, even if they're 25 years old, we're not going to put 81% of their money in stocks. That's way too much risk. Those over $150,000 a year had less, with about 76. And again, I feel that for the majority of people, that is too high a level of risk. Many believe that last year's run-up, the big market buildup in 2021, was really a speculative bubble. Not real money that was going to stay with us, that the market wasn't really building great value, that the valuations of these companies were not really what we were representing them to be in the market. And it was really done by speculators looking for a place to park money and get some yield, right? People were just looking for a place to get some growth and yield. But the losses that the market is causing us to endure now are actually bringing us back to levels we saw before the pandemic. In other words, this bear market is doing its job. Now, that sounds terrible for a financial planner to say, but markets need to correct from time to time. And if they don't correct often enough, then they go into a bear market where the correction is more dramatic. And we need to get those valuations back in line with the real opportunity and potential that those companies have. So that's what's happening right now. And it's a difficult and painful time. And if you're relying on the money that's in the market, seeing your money drop 20, 30 or more percent is tremendously difficult. My encouragement to you is to develop a comprehensive plan that allows you to not rely on the market, to place the money that you plan to live on in safer assets that can still grow. And I'll show you how to do that here in a moment. Something else that's exacerbating the problem is that most people have been under-saving, not saving enough. And so if you've been under-saving and then you go through a bear market and see the value of your account drop 20 or 30%, that's terrible. And guess what? The median 401k, according to this report, had just $17,700 before the pandemic. So imagine how much pain those folks are feeling. It feels like they can't get anywhere. Something happened years ago that put us into this position, really. Back decades ago, when people had what we call defined benefit plans, pensions that you could count on to provide you income in retirement, those defined benefit plans really took a lot of the worry off of the plate of the average American and put it onto the plate of those who were responsible for building and maintaining and investing those plans. And those people, of course, were seasoned professionals used to seeing this. Now what's happened is pensions or defined benefit plans have disappeared. That risk has shifted to the American public. And you and I are having to make really great decisions that probably we should have never been put into this place. We need to have a plan that allows us to have an income during retirement that is reliable and safe and allows us to enjoy the beach or sleep at night without worry. And here's what we do at Lord & Richards. We know how to do that. We've been doing that for years. We've been walking people through bear market cycles as well as bull market cycles, volatility and smooth sailing. And the reality is, if you have a comprehensive plan that takes all of that into account, you can sleep better at night. And for us, that really means starting a conversation, taking a journey that begins with a discovery process where we learn more about each other. We learn your goals and values, and then go on to test through our financial independence review process whether you're ready for retirement and whether your retirement portfolio really can withstand the shocks that come through our economy and market and still leave you A-OK on the other side. It really does just start with a conversation.